Hi, this is Zach with a chart rundown. It is Friday, the 15th of May. Starting with the FTSE 100, which failed at that resistance line there from last month. Also failed just above the 50-day moving average, which is at 10,334. Obviously stayed there enough on Thursday, well, yesterday, on yesterday's close, in order to give the impression of bullishness, but the oil price is going through the roof, so that's obviously a headwind on progress. Got the floor of the channel there at 10,190. That's the initial target while we're below the 50-day moving average, and then obviously the support down to 10,150. Worst case is that we have to go have a deeper dive towards the initial March support there around 10,080, and then the 200-day moving average at 98.77. But presumably the lower figure would only happen if oil went through 110, 120, etc. RSI 50 failure, so that's the second one, well, third one actually in the recent past that we've had, so not a good look. And that's also gunning for the idea that we are going to head closer, much closer towards the 10,000 zone than we are at the moment. DAX is next, and here breaking that uptrend line there from back in March, and the 200-day moving average, 24,100. Obviously, we're not that far away from it, but we've had an abandoned baby candle yesterday, so gapping up on Thursday and then gapping down today. Which is not a great look, especially when combined with that trend line break. The 50-day moving average at 23,700, probably now the minimum on the downside, and after that we've got a gap to fill towards 23,400 from back in April. RSI now on the wrong side of neutral 50. That was the best thing about the DAX, and that has gone too. In terms of the upside, if we can manage an end-of-day close back above 24,100, then obviously yesterday's resistance 24,500 and then 25,000 could be on tap after that, but it looks as though that is a less likely scenario. The Dow is next, and here closing above the key 50,000 level, so just totally in contrast to the fears over the oil price in Iran. Over the uptrend line there from back in March, which is around 49,500. We should be on our way towards 52,000 plus, which is that November resistance line projection. Otherwise, more likely, given the other weaker markets today, we've got to stay in a range between 48,700 and 50,000. RSI at 63, so this market way above the DAX and the FTSE in terms of technical strength. Moving along to the cryptos, and here we're still struggling with the 200-day moving average in the top of that February channel here. We were trying to get a touch of the 200-day line. Still haven't got it, actually. We didn't get it yesterday either. So if you are a bear, then this is the zone to go short of Bitcoin at, just below the 82,000 level, just below the 200-day moving average. If we do get a close above the 200-day line, then there's not much resistance between there and 90,000, which might explain the current shenanigans. On the downside, the support area now towards 78,000, which was basically the initial May support, and we managed to hold that uptrend line in the RSI window, at least for now. We're in the upper 50s, which is actually a good place for progress to the upside. If there is a rug pull, then the 50-day line just below 75,000, the obvious place for support to come in, if it's going to come in. Ethereum is next, and here never looked as quite as strong as Bitcoin on the recovery from February, where we've had 3 consecutive days now at the 50-day line, which is bona fide a buy point. That's at 22.37. The only problem is that the RSI has failed below neutral 50, so we may have to have or see a move down to the floor of that channel there from February at 2100 if we get an end-of-day close below the 50-day moving average at, as I said, 22.37. On the upside, there is plenty of resistance at 2400, but obviously we could have a little rebound towards that area if we are lucky. Gold is next, and here it's had a battle with the 50-day moving average as well. And as you can see here, the battle ended in defeat with the 50-day line falling quite rapidly. And we're now on the uptrend line there, 45.50, the uptrend line there from October. If that goes, then one would presume that we'll see a test of the 200-day moving average at 43.43. And if you're a bull, that was probably the safest place to take a punt on this market, given that that 200-day line is rising. In the unlikely event of an end-of-day close through the 50-day moving average of 47.30, we're looking for the top of that falling trend channel from January up to 4,900 at best. The market at the moment remains crude oil, and it's on the front foot. We managed to find support at $99 or just above that yesterday. In fact, the exact number was 99.39, so technicals work there. Below that was the 50-day line, but we managed to bounce above that, so that's a bullish sign. And a break of Wednesday's resistance through the 103.67 level, and we should be looking at a direct move to $110 over the next few sessions. Best case, obviously, here is that we head up to the top of that channel, which is currently pointing to $140 by the end of next month. The other point to note is there is a line of resistance there, so that needs to be broken there at 105. So it looks like 105 is the big level there for crude oil. RSI 50 plus rebound is very bullish too. Moving on to the stocks, and Blackbird is first. Here we've got a bear trap gap reversal, which is probably one of the strongest turnaround signals you can have. That's through 1.6 pence, and above that, looking at the top of the channel there, from back in September as high as 2.6 pence. Obviously, we had an RNS out today. I'm not quite sure that the RNS was quite as bullish as the share price, but who's complaining? We have bullish divergence as well in the RSI window, so that is actually looking at least like a charting recovery situation. Only back below 1.6 pence now on an end-of-day close basis delays a potential recovery. Bradda head's been on fire so far this month, and the second target there at 3.1 pence. Above that, we're looking for up to the 5 pence area, which was the old July 2023 or the old summer 2023 resistance for this market. Cindrigo all financed up as well in the recent past, and here you can see we're breaking above our first target there. The second one, really the 200-day line, 9.45 pence. Hopefully we'll get that in the next couple of weeks or before the end of the month. Best case by the end of next month up to 12 pence, while we hold above the old target there at 7 pence. One of the stocks of the year, or the recoveries of the year, has been Great Western Mining, which was vying to be the next Kendrick or the next Guardian Metal. Here you can see that we're edging towards our fourth target there, around 6.25 pence. Looking for that by the end of this month, while we stay above the previous target there from December, that December resistance line at 5. So above 5, looking for 6.25 on Guardian Metal. Been looking at ImmuPharma in recent days, and it might be jumping the gun, but it's not being too late on these things either. We have broken recent resistance around 4.3 pence. Above that, looking for the 50-day moving average at 5 pence, even if the shares fall back again. I think we might be overdue some news from that company. I think the last time, it's not too long ago actually, but the shares behaving as if there is something in the pipeline, literally in that case. Iconic Labs, not for widows and orphans, but especially if I can type out the right stock. Here we have a very volatile situation, but at the moment still waiting for the shares to get through the 200-day moving average of 2.25. If they can do that anytime soon, then the target here could actually be as high as 5 pence, hoping that that would happen by the end of this month. Ideally, though, we stay above the 50-day moving average, now rising at 1.68 pence. Whatever happens, if we don't do that, then maybe this is a false dawn. On to Kendrick, which had some news today. Here you can see the shares are up 31, nearly 32x so far. We've on-off, well, the umpteenth target on the upside. Call here this week has been that above 8 pence we could go up to as high as 12.5 pence, which is a March resistance line projection. Ideally now we stay above the floor of the latest gap there, around the 7.4 pence level, whatever happens. A punchy call that, but maybe the shares can do it. Moving on to Metals One, which came up with a decent announcement today, and the shares nearly up 100%. The current situation is that we've broken through post-March resistance of 1.97 pence. Above that, looking for the top of the triangle here, as high as 2.5 pence. In fact, given how close we are to that particular target, one can see that we also have the 200-day line at 2.75 pence as a potential target there, and above the 2.3 pence zone, looking for that in the coming days, or maybe even by the end of the day. Moving along to Pantheon, which with the oil price so high, even Pantheon shares have to respond. Well, they don't have to respond, but they are. Here you can see that we are about to break the recent major resistance there around the 12.5 pence level, about looking for 16 pence by the end of next month. Onto a stock where somebody told me that the shares could go as high as £20, I believe, and here at £1.30, which is relatively modest compared to that target, but above the top of the gap, 117. We are looking for £1.80 as soon as the end of next month. So let's see if Panther can deliver. Finishing off with Zinmold, and here the situation is that we're looking at a recovery. Well, we already had the recovery, actually. We had the top of the channel there already placed there at 8.8 pence. What's interesting is that the next level up would be 10 pence, which was the old summer 2024 resistance. Ideally, now we stay at or above the old 8.2 pence resistance from October on an end of day close basis. Otherwise, it'll be a bit of a bull trap. If that's a bit tight, then the 2026 peak, 7.7 pence, is a potential support area, although we're really looking for the shares to stay on the right side of 8 pence. That's it from me today. More updates over the weekend.